Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, Charles Hugh Smith from Of Two Minds, located at of2minds.com. And I got to tell you, there is a ton of stuff going on and a ton of noise in the markets and the economy right now. From a revival of the inflation-deflation debate to talk of the collapse of the imminent collapse, might I say, of the banking system and the global banking system on top of that, there is just so much chatter, so much noise, and so much news. So what we've got to do is we've got to get our bearings and we got to begin thinking about all of this stuff correctly because we really don't want to fall victim to it. And I can't think of a better person to help us understand these unfolding dynamics than Charles Hugh Smith. So Charles, I'd like to thank you for joining us again today on Silver Doctors.
Thank you, Paul. It's my pleasure.
Now, Charles, we got to start off with one of my favorite topics. So I don't like having labels put on me, but I mean, I guess if you were going to put a label on me today, right now during this topic, it would have to be like practitioner of very basic math, or it would have to be hyperinflationist. And I say that because there's been a lot of slack thrown at the hyperinflationists lately saying, oh, they've got this religious fervor when they talk about the certainty of which hyperinflation is the absolute end route. But Charles, I want to point out three really quick points with you real quick. And then I just want to ask you a few questions about this. And, my first couple points are going to be with the CPI and specifically with the BLS CPI inflation calculator. Now, people can play around with the inflation calculator, and I have many times. First point is this. In 1933, a $20 gold coin, basically 1 ounce of gold, 0.96 ounces. Right? When Roosevelt unconstitutionally confiscated the people's gold in 1933, if you took it into the bank, you would have got $20.67, which is a 2-point-something return. So if you were immediately spending it, I guess it would have been a good thing, right? But the point is, using the BLS's own inflation calculator, if you would have had that gold coin and kept it this whole time, that gold coin today is worth over $38,000 at today's gold price of $1,775, according to the BLS's inflation calculator from 1933. Now, that $20 bill from 1933 is worth $448 of purchasing power. So if you would have kept the gold, you'd have over $38,000 in your pocket today. That $20 bill is worth less than $500. That's point number one. Point number two, also from the BLS's inflation calculator. The Ford F-150 pickup truck in 1980, your plain Jane Ford pickup truck, nothing fancy, just a two-door work truck. From 1980, from J.D. Power, I wrote an article on this, did the research on this too, cost $5,782 for the retail price for the Ford F-150. On the BLS inflation calculator, they say that purchasing power today in August 2021 from 1980 is equivalent to $20,331. So that's the purchasing power today. Now, I've owned over 30 vehicles, plus or minus, over the years. I really like vehicles, and I can tell you for a fact, you can't find a Ford F-150, the most basic one, even for anywhere less than 30 grand, right? So there's a disconnect there. And I picked 1980 because that's when silver hit its all-time record high of $50. And according to the BLS inflation calculator, that $50 from 1980 has the same purchasing power as $175 today, even though the price of silver is less than 25 bucks. So something's very, very wrong in the silver market. But those are just a couple points about the BLS inflation calculator. One, that gold, that $20 gold coin is now worth $38,000 more of purchasing power. Two, just there's a total disconnect between the price in reality and the price you pay on the street. And here's the third point. We've all heard a variant of this point one way or another. But I looked up the numbers yesterday on USAA.com. That's where I bank for whatever reason. But if you have $1 million in the bank, right, with USAA.com, you can get a whopping 0.2% interest on the performance savings, right? That's not the generic savings. That's the really good savings account. So I did the math on that, and that's $2,000 a year of interest income. When everybody knows at a normal rate of interest, like 5%, if you had $1 million in savings, you could draw 50 grand. And now we're talking about sustainability at that price, at that rate of interest. And interestingly enough, if you have $10,000 or less in any savings account from USA, and I'm sure it's across the board anywhere you try to save your money, but if you have $10,000 or less in the savings account, the interest rate is 0.01%. And I did the math on that too, Charles. So if you have $10,000 in the savings account, you're getting a whopping $1 of interest a month. So here's my first question. And I have a second question too, but I'll just say them both together. So the first question is, help me understand, Charles, how is it that the US dollar has not already hyperinflated based on just a few simple facts, such as the three that I named there? That's question number one. Question number two. So if it's true that the dollar has already hyperinflated, are we not in the crack up boom right now, Charles? And it seems like, it's being cloaked by convenient scapegoats like natural disasters, or, all of a sudden everybody's got, the new invention of the new thing that they call money, or the best one yet, supply chain disruptions, right? Which I'm not denying the supply chain disruptions are real, but in my opinion, they're an underlying symptom of the issue of hyperinflation and the crack up boom. So, where am I wrong there, Charles? I know I threw a lot at you at one time. You probably weren't prepared for that as opposed to just a regular old question, but give me your initial thoughts to what I just said there, Charles.
Okay, Paul. Well, that's great. Maybe we should describe for the audience what the crack up boom is, because I think that's a really important concept, and I'll let you answer it. You can do a better job than I can.
Well, as far as my gross oversimplification of the crack up boom, when the money printing or the exponential growth and unsustainable growth in debt and credit, or when all of these things are taking place, what happens is a loss of confidence in the currency itself. So as this loss of confidence happens, people look to spend their currency just as fast as their currency is coming in, because the debts are going bad, prices are escalating, and all of these things are going on in the real economy. So the crack up boom is just your mad scramble to get a hold of anything and anything real that is not nailed down. And we're seeing this manifest itself everywhere, right? People want to upgrade their houses and add on that deck before they can't get finished wood at a reasonable price. People are buying new cars like there's no tomorrow. And I bought 3 of them brand new myself just within the last year. So, I'm participating in the crack up boom myself. So this is what the crack up boom is. It's like a game of hot potato, but it's more like a game of a nuclear bomb instead of a potato in that sense, Charles. So the crack up boom is the end result. And see, the thing about the hyperinflation is that we've all seen that graph where they say, well, the dollar's lost 97% of its purchasing power since 1971. Okay, but the thing about that is, see, there's an infinite number of digits to the right of the decimal point. So the dollar doesn't have to go to its intrinsic value of absolute zero. All it has to do is lose enough value to just be outright rejected, right? When you start weighing it like they do in Venezuela, because it doesn't even make sense to count it anymore, stuff like that. So I'm rambling again, Charles, but I'm going to throw it back at you now.
Okay, well, great, Paul. No, that's good. We covered the crack up boom because I think that's what we need to address. Like, how did we get to this place where cash is trash, right? And then people are not only, as you say, buying something material, which makes much better sense than the alternative, which is people are speculating wildly. In other words, they're pouring money into a stock market that's already at extremes of overvaluation. They're buying sort of questionable cryptocurrencies and NFTs, and stuff like that. And so that is really part of, I think, the zeitgeist of this era that's even scarier, if you will, than the crack up boom, because people are now being rewarded for speculating in assets which really are super risky. For instance, the meme stocks, like some stock that has no value other than the fact that other than hedge funds are shorting it, and this kind of speculative frenzy usually, it never ends well. There's never been a period in history where we can look back and go, oh, that speculative frenzy just kept going decade after decade. It's like, no, they all implode. And so that's worrisome, because if you're earning money and you're buying material things, you're still going to have the material things. In other words, like, your house is still going to be usable as shelter, even if it falls in half, or your truck is still going to be a useful form of transport. But if you bought an NFT or some meme stock and it loses 90% of its value, that money's gone forever and you've got nothing, So let's talk about the inflation. And if you don't mind, I'll make a couple of points to your 3 points. Is that I think the foundation here is that it's being manipulated. And in other words, we're being presented with data that's fabricated for the purpose of supporting a narrative that inflation is under control, right? And so there's all these enormous distortions that you outlined. Our first job is to understand just how distorted they are. In other words, it's insane that $1 million earns like $1,000. That's crazy. In other words, you've destroyed the return on savings. Well, that's the whole basis of capitalism, right? Is saving money and then investing it in something productive. And so if that's been destroyed, then you create a whole other set of incentives, which is borrow to the hilt and then gamble to the hilt. Well, those are really destructive, trends, right? So there's that. Then the other thing is a lot of the inflation you describe is it's been offset to some degree by debt. I think that's a really important measure. In other words, back in 1980, when you bought your Ford truck for $5,000 or so, sure, you could have gotten a 2 or 3 year auto loan, but you probably had to pony up at least $1,000, down, like 20% down, and so on. Well, now you can buy, $40,000 vehicles with either no down or some trivial amount, and then you can borrow it for 7 or 8 year loan, which means, of course, that you're paying a lot more interest. So we've substituted earnings and wages and so on with debt. And so that's made our society entirely debt dependent, both at the private sector level, corporate sector, and at the government sector levels. Everybody's now dependent on borrowing money, hence the need for the Federal Reserve to push interest rates to zero, because otherwise this whole contraption falls apart. Now, I'm going to ask you for feedback, but let me just make one more point, which is I think we need to look at globalization. And a lot of people who are deflationary, and it's funny because there are deflationary elements, right, in the global economy. They say globalization's been hugely, deflationary, which it has in terms of like buying blue jeans and electronics and stuff. The price of clothing and electronics has fallen, but I think we've run out of rope on the globalization benefits. In other words, globalization was able to deflate costs by finding an ever cheaper labor force, So it went to China for, 20 years. Oops, China's wages are starting to rise. Then we go to Vietnam. By Vietnam, then we go to Cambodia, Well, now globalization's run out of places that people will go ahead and work for almost nothing. And so you've got you've got the end game there of globalization pushing prices lower. Now prices are going up, right? And the supply chain issues that you described, they're real. They're not just fabricated. It's like labor prices are going up, materials costs are going up, energy costs are going up. All the inputs that go into making stuff are going up. So that's real. So we have to to conclude my little ramble here, is we have to separate out what's distorted from what's real, and that'll help us, guide our decision making going forward.
Mm-hmm, mm-hmm. Very interesting. So sticking on this topic for distorted and real and the statistics, the disinflation crowd, I don't know if it's the deflationists per se, but the disinflation crowd in general has been pointing to a couple things recently. One of the recent things is the August CPI that came out, and it's like, 5.4% headline number, it's slowing, and 0.3% month over month or whatever it was. It's like, it's the proof of disinflation right now. And then on top of that, right, like what I would call the Fed apologists or the system enablers or the status quo pushers, whatever you want to call them, right? It's like they get so mad, right? And it's not angry, because there's a difference between madness and anger. But they get mad when you say, like, when you question like the legitimacy of the numbers, right? As if war were not racket. Which I've seen. But I question the integrity of the data myself. So here's just one example, and I want to dive into that a little bit more, so you could give us some more examples between separating just the distorted from the real, because the latest CPI, if we want to split hairs with the disinflation crowd, is that snacks are down 0.4% from last year, and snacks are up 0.6% from last month. And cornmeal is down 0.7% from last year and down 0.5% from last month. Now, Charles, I've been writing extensively about the price of tortilla chips for the last year and a half, for the last 18 months. And I can tell you for a fact that the real world street price of tortilla chips is up 89% since March of 2020. And from just last month, I can show you several receipts where the price of tortilla chips is up 32%. So obviously, to me, that's a distorted statistic, and it's not really representative of the actual, it's distorted, as you put it, which is a great word. So I guess the generic question is the data legitimate? And like, how do we know what's distorted and what's not when it comes to inflation and all this talk about inflation? Help us break it down a little bit more, Charles.
Okay, well, I'm glad you brought that up, Paul, because that's the tortilla chip index. And it's more accurate than the CPI. And I had proposed about maybe, I don't know, 7-8 years ago, the burrito index, because we used to be able to buy a street truck burrito for $2.50. I mean, a pretty good one. Then it went to $4.50, $5.50, $6.50, $7.50, and I think it's pushing $10 now to get a decent burrito at a truck, right? So that's a 4-fold increase in like maybe a decade at most, right? Well, wait a minute, 4-fold, that's huge, right? And so the distortions are so sort of comical, really. Like I wrote recently about, you're familiar with it, and maybe many of our listeners are too. How does the federal government agency calculate the cost of housing? Well, it does a survey of homeowners and asks what their wild guess is on what they could rent their house for. It's all like, well, wait a minute, can't we just go get the data on what actual houses rent for? And so it's just so absurd. Like, the lengths they go to distort this thing is so bizarre. And the reason why that Ford F-150, which frankly is more like, as you said, 30, that's almost like, I'd say 40 is the more realistic bottom end. You want it loaded, it's 60, right? So you're talking about a 10-fold increase of the truck price in reality, right? From 5,000 to 50,000. Almost 10-fold, say 8-fold in 40 years. No. Well, they put in hedonic adjustments, right? So they say the car stereo is better in the Ford, and the airbag, now it's got 2 airbags. So they deflate that $40,000 tag down to it's the same price as it was in 1980 because it has, double airbags and a better fuel injector and, blah, blah. And it's all like, hey, listen, that doesn't make any sense because we're in the real world. We have to buy the truck, and it's like, if this is the cheapest truck, that's the price we pay. We're not saying, oh, well, hey, give me the hedonic adjusted price and give me that truck for $5,000. We have to pay $40,000. So there's just so much nonsense. And I think the point here is that the narrative that the economy is strong, that the economy is stable, and that the status quo is doing a great job, that's all false, right? If the data were real, that would become so obvious that then there'd be political, revolt. And so the narrative has to change. And so, like I said recently, we don't solve problems in America anymore. All we do is adjust the narrative. And then that's what we've considered that the solution. So, the thing about inflation, I want to make another point here, which you mentioned about money, is governments are very careful to keep a monopoly on money, right? On currency, right? Because if you have an alternative, then you can escape, their currency and buy something else. And you mentioned Venezuela. And of course, what do people do there? Well, Bitcoin is the, informal reserve currency in Venezuela, because you can still do it sort of secretively, even though the government's trying to repress it, you can still buy Bitcoin and use it to buy stuff, right? And so I think that in terms of like solutions, if there's competition for the government currency, then the government has to face up to reality, And so the hyperinflation that we're talking about, it's because the government maintains a monopoly on money, right? That's only possible if there's a monopoly, and so that's why, FDR. Eliminated gold as an option, and why all these other countries are eliminating cryptocurrencies and precious metals is because they don't, if there's a competitive form of money, then everyone's going to abandon their hyperinflating currency.
Great points. I would push back a little. Well, I'd push back totally on Bitcoin. We don't have to get into that today. We could get into this one day, but I'd say the other thing that's a problem though is, pretty soon though it's hard to have those savings, right? It's like your average Venezuelan doesn't have savings per se,
right.
which is the other difficult thing. But sticking on this inflation just one step further, there's also a dynamic about junk fees, because I think you like made me think about something interesting when you were talking about the price of housing and rent and stuff like that. Is, we just got this house less than 3 years ago, and my property taxes alone, just my property taxes, have already gone up $200 a month, Charles. $200 a month increase in property taxes in less than 3 years. And it's like all this junk fees out there and all this other stuff that's not being captured. The price of that Ford truck. Well, in addition to that, the price for insurance is sky high now. And, the price for gasoline, and then you got to register it, and you got to pay the taxes on it to the state, and you got to pay to get your sticker on the tag that says you're a legitimate licensed vehicle that you're driving, and all of these, I think you call them junk fees. So did you have anything to add on top of that as well, Charles?
Yeah, no, I'm glad you brought that up, Paul, because the junk fees are they're not taxes per se. So the local government says, oh, we haven't raised taxes, but there's this fee, and then there's this special assessment fee for your property taxes, and the core rate may not change, but they put in another $100 a month for the school district, and then there's another $100 for the library, and so again, it's a form of deception to kind of like keep us frogs from realizing that the temperature of the water we're in is rising. And I think that let's talk about wages and jobs briefly, because, I posted a lot of charts from the Federal Reserve, website and stuff about how wages have been losing ground for 40 years. In other words, right around that time that you mentioned the Ford F-150, 1980, the peak wages in terms of purchasing power of your wages was like 1976, right? Just before inflation and started to eat away the gains in the late 70s. And so I think that, to me, the core sort of deception that the status quo has to pursue is that 90% of us have been losing ground for decades, right? And we now substitute what we've lost in the purchasing power of our wages by debt. And so I'll give you an anecdote, and I'd like to hear your feedback on it. Is one of my readers emailed me and said, well, you're always talking about wealth inequality, and we know it exists. The billionaires are flying into space, and the rest of us are here trying to make our, truck payment. But he said, I was just traveling through West Virginia, and I saw like so many new vehicles. I saw, new riding mowers, and it seems like people are living high on the hog, And so my response to that is a point that you brought up about savings, and that when we talk about middle class wealth and earnings in 1976 or 1980, 40 years ago, you could what I term it is you could turn your labor into capital. In other words, by saving and investing. So in like 2 generations ago, a middle class household could buy savings bonds and pile that up, right? Or they could even buy a rental house or run a side business that required some capital. Well, now very few households have any capital. They own a house, which is now basically a gambling chip in the housing bubble, right? And that's not the same as productive capital, because unless you're renting a room in your house, you're not making any money on it. And so it's not really productive capital by my definition. And so what's happened is inflation and the suppression of the purchasing power of wages has decapitalized the middle class. That's what I say. Very few middle class households actually own any productive capital. To your point about interest rates, well, even if you've saved up $100,000 or a couple $100,000 in your 401k, you're forced to go into the gambling casino of the stock market because you're not able to earn anything in safe investments, which used to be the core of middle class wealth. People bought savings bonds, treasuries bonds, and that's how you made a safe return. Well, now there is no safe return, so now they've pushed everybody into the casino, and most of us don't have the skill set to gamble effectively. And so what happens is the vast majority of people are sucked into these bubbles where they think, oh, housing only goes up, cryptos only go up, the stock market only goes up, and then there's a crash, and everyone goes, how is this possible? But all bubbles pop, Paul. As you and I know, all bubbles pop. And what they've done is the first bubble was from 1994 to 2000, the dot-com bubble, right? Then the next bubble was from 2003 to 2007, 8, the housing, subprime bubble. And now they've managed to run it from 2009 to 2021. They've managed to double the length of the bubble. But I think what they're doing is by kind of distorting everything to keep the bubble inflating, they're going to create a crash that's twice as bad.
Indeed, and the flip side of that, which I would tend to lean on, would be, and if it's not a crash per se, then the destruction in the value of the dollar is going to be just as bad as that crash of 50%. Because I know, you read an article, I think I can't remember what it's called, like who's going to call the top of the stock market. And sure enough, the stock market dropped. I mean, nobody hit record highs next week, but it's like yes, because it's like the people talking about silver. When's silver going to take off to the moon? Silver's still halfway from its all-time record high back in 1980, right? So it's like same thing as when is the stock market going to crash? It's almost like if we are on this course to hyperinflation, well, those are end game scenarios, and the stock market's going to crash. Only it's going to crash up in that sense. But I'm rambling there again anyway. But then the other thing is but just another side point about just the middle class and just the debt and using the debt. And it's funny too, because it's almost like the middle class or just whoever can take out a loan is starting to see these things when they're buying these durable goods now, because like, call me dumb or call me not really well timed or call it what you want, but I bought a sports car in 2016, and I joked to all of my friends about it. I was like, this is my hedge against inflation. And that was like when it was not cool to talk about this stuff. I'm like, what are you talking about? That's your hedge against inflation. And I look like a dummy in hindsight, but the truck I bought last year has actually gone up in value, which is the weirdest thing, right? That I bought brand new. I could sell it used for more than I bought it brand new today if I wanted to. So it's also about timing. If you can time these credit cycles right when these things turn, then I guess you could be okay as a way to kind of stave off or front run the inflationary environment that we set ourselves in. Did any of that make any sense at all, or am I mixing my thoughts up there, Charles?
No, I think you're hitting on something that we kind of mentioned earlier that's important, is that if you do have some savings, then obviously if you can buy something that's going to hold its value because of either scarcity or intrinsic value, then you're going to be better off than entering the casino, essentially, and that's where a lot of people have been lulled into the sense that the stock market can never fall because the Federal Reserve has got our back, blah, blah, blah. And it's all like, well, didn't the Federal Reserve exist in 2000 and didn't it exist in 2008? And it's like, yes, it did. And they went to extraordinary lengths, printing trillions to keep the thing from imploding. And so it's like, well, is there ever going to be a consequence of the Federal Reserve printing another 3 trillion or 30 trillion? And you and I know there will be a consequence. They've masked it with all these distortions we've mentioned. So I think the other thing is, let's talk about wages, because I've been focusing a lot on pushing the idea that one result of the pandemic is millions, tens of millions of people rethought what they're doing with their lives and their work. And a lot of people decided, you know what, I hate my job, I hate the commute, I hate not having any time with my kids, and so on. And it's like many people figured out that they would either sacrifice their wages, or they figured out some other way to live on much less, right? And there's a lot of ways that we know people qualify for disability. Maybe some of them are just kind of maybe not truly disabled. Some are. Other people just are living off grandma's Social Security. Other people are doing informal, cash work or whatever. So I think that wages are skyrocketing because tens of millions of people have decided, I don't care. I'm not going to go back to that job if you give me another couple bucks an hour. Mm-hmm. And so that's an inflationary pressure that most people don't really factor in.
I think that's an interesting point that you're making there. And I would say a couple things about that, as far as, to me, it's also like kind of like, I don't want to call it the third worldification of the United States, but nor do I want to call Mexico third world. I mean, I think Mexico can only go up and the United States can only go down. But here's my point. I lived in Mexico for a couple of years, right? So one of the things that I thought about when I was living in Mexico was, wow, this is weird because like the American dream, like when I was high schooler, like I was like, oh, when I'm 18, I'm moving out and I can't wait and I'm gonna get my apartment. And sure enough, like a dumb guy, I took off a couple years after high school before starting college. But I mean, I was making 10, 12 bucks an hour slinging pizzas in a pizzeria, right? So, but like in other places, just like the thought of like, I'm moving out and getting my apartment, that like doesn't even cross the person's mind. And they're like 25, 30 years old, living at home and just kind of opting out in that sense, if that even makes sense. So like, it's like a combination of the opt out as you're talking about, where people are realizing, that's another thing a friend told me in Mexico is like, well, the other problem is, yeah, we make pesos and everything we buy is dollars. So everything is so expensive. So you got to figure out how to make dollars. So to your point, it's almost like opting out is like finding a solution, finding a way to make things work, to get the income coming in from multiple sources now. Because I mean, forget that one job with the retirement, that's a pipe dream. And now it's like, well, the one job's not even enough. So, and then the second income stream, that's not even enough. So now it's like, well, I got to have my job, I got to sell stuff on eBay, and I got to do Uber, and I also got to do DoorDash part-time, right? So, and I can't move out of my house until I'm 30, and I'm not even probably thinking about moving out of the house anyway. So I would add on, and I would say that I think that the opt-out is such an interesting concept, but not all of it is by choice. Some of it is by the forced downgrade, so to say, for everyone to call it, of the living standards in the United States. Thoughts on that, Charles?
Yeah, no, absolutely. Excellent point, Paul. And that's really the big theme that we're talking about is the loss of purchasing power, which we call inflation, but it's actually just the money you earn buys so much less than it did 10 years ago, 20 years ago, 40 years ago, right? So and how much less depends on exactly what we're talking about. Could be tortilla chips, vehicles, rent. But I think what's interesting to me is how people are solving this problem. Like you said, their options are not unlimited. In other words, everybody would like to be able to make $150,000 or $250,000 a year playing video games online or whatever, right? And I guess a handful of people do, or they become an influencer and make 500 grand a year or whatever, or they made 500 grand trading NFTs and meme stocks. But for the rest of us who aren't that smart or fortunate, then we've got to adjust to the fact that our money is probably buying at least 40% less than it was not that long ago. 40% less. So, and that's what being hidden from us, right? Because if we woke up and somebody admitted publicly, yeah, your money, your earnings are buying 40% less than they were a decade ago, people would go, wait a minute, something's wrong, right? Mm-hmm. So that's the boiled frog thing, right? They raise the temperature and then we're not supposed to notice. So but let's talk about solutions a little bit, because that opting out, as you say, is a solution. And I just saw an article in The Guardian, the UK paper, about an American couple, and she had the big corporate job and they were paying the high rent in some, urban center, LA or New York. And then she lost her job, and then they ended up living in a van. And they continued to live in a van for 5 years until they could afford an RV. But it's kind of like, and there's a lot of people looking at that lifestyle, right? Not necessarily as a choice, but as this is the only option I have left. But I also really like the micro house movement, where people find a rural lot for a few $1,000, and they put up a little house that's like 300 or 400 square feet. And they just abandoned the whole McMansion thing, where I have to like enslave myself for 40 years of work to pay my $450,000 mortgage or whatever on a house that was $150,000 a decade ago. So I think that people are actually getting creative, and I think that's a positive trend.
I do think that's a positive trend, and it's one of those trends that's totally going to be forced on everybody, whether they want to get creative or not, right? Like people who aren't getting creative now, I mean, my goodness, they're just falling further and further behind. Like me, I'm trying to learn how to garden, and I'm in my second year of really, really trying to learn. But I mean, it takes years and years and years to develop actual skills and to be able to live differently. But the point is that there has to be a downshift in expectations along with an uptick in, well, what are you able to do? What are you able to produce? And what are you able to get by on? That's not, because that's the other thing about the McMansions, right? I mean, sure, you might be able to afford that $500,000 house this year, right? But what happens in 3 years when you can't afford the property taxes on it? So it's like, this forced downgrade of lifestyle has to be met with these creative ways, whether the people are prepared for that or whether they're willing to accept that or whether they even see it or not. I'm not sure at this point, but it not only is a conjunction of like the income streams and we'll get less of a house or get a tiny house or a van or whatever have you, but it's also a combination of you got to up your skills, and they have to be practical skills, and maybe grow some tomatoes and share them with your neighbor, and hopefully they can fix your plumbing or something like that. So I think it's a combination of those things as well, if that made sense, Charles.
No, you're absolutely right, Paul, and I appreciate you bringing up like the practical skill set. And I'll give you a quick example. You've owned a lot of vehicles, and we all know that getting anything repaired on your vehicles now is in the hundreds or thousands. And so even if you're not a mechanic, if you can do some simple things, then you're going to save yourself a ton of money. Like I swapped out a failed sensor on my old Civic. This was a few years ago, but it would have been hundreds of bucks to have somebody do it. I bought the part online, borrowed the tool to take it out, the usual, all the stuff you're talking about. And and it's very real in terms of inflation too. Like we just helped a friend whose thermostat went out on their oven, and so the thermostat, if you buy it through the the official repair service, it's $140. Well, online it's $42. And because we've, sort of handy, we just did the work ourselves in a couple hours, and it was $150 labor. So you're talking like $300, and then we got it done for 42. And that's, I think, pretty typical, don't you think? Like it's almost unaffordable now to have stuff done professionally.
It is.
Yeah. And
so in addition to the planned obsolescence with it too, right? Like that's the other thing is like, it's funny because the iPhone 13's coming out, and my wife still, don't tell her this, although she's probably going to hear this, but she's still stuck on the 8, right? The 8S or whatever it's called, like that. So it's like, and wouldn't you know it, it's like running slower all of a sudden, and it's like the battery's holding even less of a charge, and it's like, this is really weird that's going on here. It's like somebody wants to force a little bit of an upgrade on my wife's phone, but like, yes. So you get to and then the fact that the repair, well, also if it costs a few $100, well, how much is the stove, right? I mean, obviously the stove is like $1,000 now, but I mean, if the repair is going to be $700, then why even repair it in the first place?
Exactly.
But if you can repair it for 40, then yes, absolutely repair it. But the problem is, you got to get out of Starbucks, and you got to get out of McDonald's, and you got to get out of, the movie theater, and you got to get out of, the worldwide WrestleMania fest, and you got to actually learn something here, Charles.
Yeah, no, I think you're absolutely right. And it is remarkable to me how few people now know things that our grandparents took for granted, like how to have a home garden. This was kind of a standard way of saving money. And nowadays we'd say, well, it's organic, or it's much healthier because we know where the food's coming from. I grew it in my backyard. And a lot of those skills have been lost in the sort of professionalization of society, right? That everybody's so busy and this and that they have to pay a professional. And then the professional, of course, is a small business person who is now looking at just endless junk fees, right? Like, so your plumber, everyone goes, oh gosh, they charge almost $100 an hour. And it's like, because I was a building contractor when I was in my 20s, I know. It's like, well, that plumber they're paying, like 50% workers' comp rates on their labor. They've got junk fees endlessly. And so it's like, that's what it costs for them to stay in business.
Bonded, insured.
Yeah. So where does this go? Where does it go when we're losing so much of the purchasing power of our labor, and the only avenue that's being presented is to gamble whatever we have in a casino, which is rigged, by the way. So it's rigged. You're winning now, but that's not as guaranteed as everyone thinks. So where is that going to go? And I think it's pretty obvious the system is going to come apart in one way or another. And so the idea that I want to propose for your feedback is we're reaching like thresholds. If you look at systems as then you say, well, when they get this fragile, this vulnerable, and this tightly bound, like where everything is interconnected with other fragile, vulnerable stuff, then when that unravels, and this is where the global supply chains are a good example, when the dominoes fall, like nobody can stop the dominoes because they're too tightly connected now. And so they go swirl around the world and you're not able to stop them from falling. And so we're reaching these levels where there's no more room left, right? You can't push interest rates below zero. People talk about that, but then the banks would not be able to make any money. So then what are you going to do with your banking system? And then we've pushed globalization to the max, and we've pushed the gambling casino, like, well, don't worry that your wages are worth 40% less, because now you've doubled your money in the casino. And so I think that everything that we've tried to keep the status quo kind of glued together, duct taped together, is now reaching extremes, and one of them is going to break. And when that one breaks, it's going to take it all away.
Indeed, I would agree with all of that, Charles. And let's stick on this definitely, because this is a great subject that I want to start now. For lack of a better term, the microchip shortage. So talking about the global supply chain disruptions and all this and all that. And I just want to make one off comment about this microchip shortage. Now, I am a vehicle aficionado, so I do like vehicles. Now, I'm not like got a car, fancy Corvette, Stingrays, and all this stuff. So it's not like that, right? So it's like one car at a time or three cars at a time, whatever. But here's my point, right? Like because I've owned a lot of different vehicles. I mean, I like driving, but I'm not sure if you've seen the brand new Jeep Grand Wagoneer, Charles, but this thing costs, you can get this thing for like almost 110 grand, if you load this sucker up. And my point there is there's no shortage of microchips on this $100,000 Jeep Grand Wagoneer. So, if it's a barbecue grill, it might be kind of hard to get that, Wi-Fi Bluetooth announcement that it's the right temperature to throw the Impossible Burger on the grill, but if you got enough money to pony up, you can get as many microchips as you want in this Grand Wagoneer. That's just an off-the-wall comment. I don't even know if you want to make a comment to that. But before we talk about the microchip shortage, I want to say this. This has been building for years, right? In May, on my birthday, actually, of 2019, President Trump declared a national IT emergency. So not microchip per se, but just IT in general, cybersecurity, the supply chains. President Trump declared a national IT emergency. Now, in May of this year, President Biden extended that emergency until May of 2022. That's one point. There's another thing that like this hack, right, of this pipeline, right? I don't want to get into the conspiracy, but this hack of this pipeline back in the spring that, oh my goodness, we got all this cybersecurity stuff. There was even recently, President Biden signed an executive order on improving the nation's cybersecurity. So, but getting back to microchips, Charles, with this, it's funny because everyone's like, oh my goodness, microchip shortages. Oh my goodness, microchip shortages. How come, other than myself, except nobody ever reads this stuff when I write about it, right? How come nobody's saying, well, first quarter earnings came out, and what does AMD, who works extensively and almost exclusively with TSMC, right? What does AMD do? Well, they announced for the first time ever a share buyback program to the tune of many billions of dollars, Charles. So it's like, well, which is it? Is there a microchip shortage, or are we just going to buy back our shares to boost shareholder value? So sure enough, just looking today, AMD stock is up over 42% from their announcement, and that's with the recent volatility in the markets. So that's a point right there. So it's like nobody wants to talk about this stuff, right? Everybody wants to pretend that we live in a world full of problem-solving do-gooders, right? That's what everybody wants to pretend we live in. But really, it's just like this dog-eat-dog, cutthroat, I'm going to get mine and I'm going to take yours as long as they don't catch me taking it. And there is this massive free-for-all out there. So you don't have to speak to one company specifically. Like I called out AMD for the share buybacks in the midst of a microchip shortage. But is the entire financial system totally rotten to the core at this point, Charles?
Well, I think I'm glad you raised that issue, Paul. And I would say absolutely yes. And I think that I've tried to write about this recently, which is that society, as opposed as separating society or from the economy and the political system, is like, I think the moral standards of American society and very possibly other cultures, but I don't know them well enough to speak to it, has really decayed. And I think you hit the nail on the head here, that self-interest, which is in modest amounts is healthy and a genetic heritage, right? Like, of course, we're gonna focus on our self-interest. But if that's the only thing that you have in your society, economy, and political system is your own self-interest, and to heck with everybody else, then you're actually on the process of collapse. That is a characteristic of empires just before they collapse. Is everybody's just out dog eat dog, going to maximize their own gains and never mind about like civic virtue, the common good. All these things have been put by the wayside, right? And I think the rot starts at the top, right? In other words, it's Nancy Pelosi worth $118 million, you know, whose husband is a financier and trades stocks that that they're in a position of power to move those higher. So it's like self-interest is like all that matters. And so what kind of society do you have? Well, what happens is everybody, the bottom 90% of us, we look at what the top is getting away with and we go, well, you know, they've abandoned civic virtue. They've abandoned the common good. Nobody up there sacrifices a dime for the good of the people. So I guess that's the way it's going to go. Well, I got to do that too, right? So then everybody's basically cheating, shaving stuff, getting away with whatever they can. And of course, we all know if you're a small fry and you get busted, then you're in prison. And if you're, you know, worth $10 billion, you cry, you confess in public, and then you're off the hook, right? And so I think all this injustice and unfairness in our system is piling up to another threshold point. And I think I don't think we're there yet, but we're going to get to a point, I think, where we're going to potentially have a French Revolution type sort of reaction to the unfairness and injustice that's built into American society now.
Mm-hmm, mm-hmm. And because as you're saying that from the top down, I'm thinking, well, by the time it gets to the bottom, there's nothing, right? There's nothing for the people at the bottom. And if it's everybody at the bottom, then you know, then it's definitely going to start to get ugly at that point, because if everybody's skimming and scamming, which, you know, arguably everybody is in that sense in the financial markets, then you have no choice, right? At that point, it's like, well, I got to eat and I got to feed my family, and I'm going to go take your food from your house because that's the only thing that I can do. Or the government's going to take it from you and give it to someone else if it's somehow any left over at that point, right? So it's like, yeah, the consequences of that top down rot, once it reaches that bottom, it's going to be an ugly picture here.
Yeah, and to your point, I think that the bottom, those of us who, you know, have depend on our wages and we, you know, we didn't inherit $100 million or whatever. We've already taken a 40% haircut. There's not much more that we can take. Right. And that's especially true for the bottom 50% of American society where, you know, I mean, if you look at the IRS data, which you probably have, I mean, the average wage is still around like $30,000. Right. It's not, people aren't, you know, sure, the top 10% are making 120 or 150 or whatever. But even those people, many of them are in very high cost places like, you know, LA or San Francisco or New York. And so they're, you know, we might look at them and go, well, wow, that family's making 250 grand. They must be, you know, doing very well. And then meanwhile, those people are going, well, the schools are garbage. So I got, you know, 40,000 in private school fees. I got childcare, 30,000. I'm taking care of one of my aging parents. That's another 40 grand. I mean, it's like they're going, man, I'm barely making it on 250,000. So that's the environment we're in, that I think that the ethical and moral decay that we're talking about is like the final stage, in my view. You know, like you try to be honest, you try to do your best, and then you realize, hey, this isn't working for me, and you look around and everybody at the top is not paying any taxes and stuff. The injustice of it all gets to you.
Mm-hmm, mm-hmm. Definitely gets to you. So a little bit of current events here, Charles. I just want to know if you have any thoughts on this because this Evergrande thing is in the news, and I didn't jump on the Evergrande bandwagon at all. And I don't want to say too much, but I do want to say a few things because I think it is interesting and I think it is important. And hold on one sec because I'm gonna cough. Okay, I coughed. Can you hear me again?
Yep.
Okay, good. Hopefully that didn't. But anyway, so here's the thing about the Evergrande thing. I just want to make 3 points, right? Like all the people who are saying, oh my gosh, Evergrande, Evergrande, Evergrande. Well, those are the same people who have been saying for years, China plays the long game. They play the long game. So, I mean, if China's playing the long game, like all of a sudden we have this Ponzi scheme collapse. I mean, it's like, that's kind of like, obviously they know about this. They knew about this. They planned this or something like that. That's just one random thought. Another random thought is, people are like, oh my goodness, financial contagion. These hedge funds, these banks, all these people are invested in Evergrande. Well, I mean, are they not going to get bailed out by the Fed, right? I mean, like either openly or in an obfuscated way. I mean, why would they not be getting bailed out? The Fed bails out anything and everything except for gold and silver. That is financial, especially U.S. Debt-based paper market financial in nature. So that's another thing. And then the third thing is with this Evergrande thing, if everybody is so certain that collapse is here, well, that means collapse is not here, right? As far as my understanding goes. So I don't know if you had any current thoughts on that, but just the point is do you have any specific thoughts? Because you'd mentioned, we're at that end stage, but like, where are we in this, international banking system collapse stage? Because like we're always getting close. Like in 2016, I remember very specifically, because this is when I blew up my trading account selling options, right? I remember this specifically, but Deutsche Bank, they were going to bring down the entire system. Oh my goodness, Deutsche Bank's going under. Miraculously got saved, and they're still kicking to this very day. So I mean, this is just going on way longer than people think, and I guess the plan is just to keep on kicking that can. Or what am I missing here, Charles?
Well, I'm so happy you brought that up, Paul, because I just wrote a piece kind of summarizing my thoughts about China. And I'll try not to ramble too much, but I have had a long interest in China, read everything I could from when I was a teenager in the late 60s when there was very little information because that was the Cultural Revolution and stuff like that. And I've been to China a couple times. We have a lot of Chinese friends from the mainland. And so I guess I'd say I'm a fairly well-informed amateur, a China watcher, right? So I don't read Mandarin, and so here's what I think is President Xi, right, has changed the game fundamentally in China, right? And we're all kind of aware of this, that he's taken over the Communist Party leadership. He's not leaving after his term like the previous premiers, and he's ramped up authoritarian measures. And I think that the story of Evergrande, in my view, is this. President Xi realizes that China's debt bubble has now reached dangerous proportions, and he either has to pop it now while he has control, or he's going to lose control, and then the Communist Party will be threatened because people will go, wait a minute, this thing's out of control. I've lost all my money, etc. So I think he's going to let Evergrande go under. And he's making that actually a policy point. We are going to end moral hazard. In other words, the idea that everybody could gamble and speculate crazily in China because, the Chinese government's going to bail everybody out, which they have. He says, nope, that's in. That's over now. We're not going to bail out speculative losers anymore, right? And because we really can't afford to. China is extremely heavily indebted, and so. The other point I think that I want to say here is China bailed out the world 3 times. And you mentioned 2015-16. That was exactly when China ramped up, borrowed hundreds of trillions of yuan into existence to save the global economy, which they considered was in their interest at that time. But China has this huge shadow banking system, which people in the West don't understand. And I'll give you a little taste of it as best I can. Which is here in the U.S., if you want to buy a house and you can't qualify for a real mortgage because you have bad credit or whatever, you might be able to find a pool of private investors to pony up the money, and you're going to pay, like, say, 10% instead of 3.5%, right? So there is a little bit of a shadow banking system in the U.S., but it's very small scale. In China, it is beyond measure. It's like an entire alternative banking system, and it's all informal. There's no backup. There's no, regulatory agency overseeing it all. So this thing has exploded into sky high levels of debt and risk. And so I think President Xi is going, okay, I got to pop this bubble, and he's got to take the power back from the speculators and big tech in China, the big tech companies. So he's saying, if I let these guys run, the Chinese Communist Party is could be threatened, right? Because they're going to take down the whole system. So that's where I think Evergrande is a key point in history. It's that the signal is the Chinese government's not going to bail out all you crazy speculators, and the losses are going to fall, and they're going to be heavy. But you know what? When it comes to the survival of the Communist Party, we don't care whose losses are who has to take losses. The Chinese billionaires, the middle class, whomever, you guys are going to take the losses now, because it's now to the point where if we let this thing run, the Chinese Communist Party is under threat, and we're not going to let that happen. So I think it is a key watershed moment. China's not going to bail out the global economy again. They've kind of shot their wad, and now President Xi has to protect the Chinese Communist Party, and that's that's his one and only goal. Never mind who takes losses from here on. I'm taking care of my business first.
And that all makes sense, and that all sounds good. Would you agree that the Fed would still bail out the concerned players here in the Western world, is for lack of a better term?
Yeah, because the Fed is far too stupid and cowardly, whereas President Xi, to whether you like him or dislike him or like China or dislike China, whatever, I think he's realizing that enabling moral hazard is going to come back and destroy your system, and that's where the Fed is too stupid to recognize that they're going to keep letting this bubble of moral hazard expand by bailing everybody out. Then when it pops, they're going to have no control. And I think we're pretty close to that. Their control will vanish.
So if I'm understanding this right, it's almost like the Evergrande thing is really bad now, but waiting, and it could be even so much worse than right now. Is that the right kind of thinking on that?
I think so. And I think that I suspect that President Xi and his insiders are looking at it going, hey, look, it's better to take a 30 or 40% haircut now than a 90% haircut. And that's what the Fed is so stupid, is that they're basically ensuring an 80 to 90% collapse, because they're going to blow this bubble so big that they won't be able to control its deflation.
Mm-hmm, mm-hmm. Very interesting. So winding down here, Charles, last question for you is, and I appreciate all your time today, and I know our viewers and listeners appreciate all your time today too. So just the last question. So we've talked about a lot today. I think we've had a really great discussion. It's great to be back into podcasting or interviewing or whatever you want to call it. But the point here is what is on your radar the most as we're moving through summer now has ended. We're in the fall and we're moving into winter of 2021. What is the one or the two things that are on your radar the most as we look to move into the winter season here, Charles?
Well, that's a great question, Paul. Thank you. I'd say number one is China, what we talked about. I think that the Chinese change in fundamental policies is going to ripple through the global economy, and most people in the West are clueless. They don't understand that this is a sea change. The tide's changed, and it's going to have huge consequences, right? The other one is alternative energy in Europe has failed. Like just relying on solar panels and windmills has now created a massive energy shortage in Europe, and that's going to crush their economy, whether whether people like it or not, or it's not an opinion, it's fact. Okay, so there's an energy problem in the second or the one of the largest economic zones in the world, right? And then lastly, I think in the U.S. here, the stimulus is at the private sector is largely run out. The federal government is still pouring money into states and counties and cities, but the private sector stimulus is over. And so the idea that sales will keep rising and profits will keep rising, I think that's misguided. I think sales are going to stagnate and profits are going to collapse because the supply chain shortages and increases are real, and they can't raise prices. And if they can't shrink the cornflakes box anymore because it's already so thin that it basically doesn't stand up on its own. It's only 1.5 inches wide.
Yeah. Exactly. Well, there you have it, folks. There is a lot going on, and we're going to have to catch up with Charles here again to figure out where we are, because we're going to be lost again in a couple months, I'm sure. Charles Hugh Smith from of2minds.com. I'd like to thank you for joining us again on Silver Doctors.
Thank you, Paul.